Hello again, guys. This is another video on how to make sure that you're not duplicating your income and not duplicating your expenses on the books, especially when you're using QuickBooks. It can be confusing to match things up when they flow through the bank feed. And it's important that you understand the framework of your money flow to ensure that duplication will not happen. So you want to have this in your mind when you're doing the workflow inside of your QuickBooks or whatever other software you're using to track your inflow and outflow. So this is an insurance company. So if you deal with this type of business and you receive money on behalf of others, there's a trust account that you need to be a fiduciary of. You want to make sure that, one, you collect your fees out of the money that you receive. And number two, there's an accounting for the amount that's owed to the end client, the person for which you're holding funds in trust. So you want to have that understood. All right, if you have that framework understood in your accounting, this will be a pretty simple process for you on the books to resolve, especially if you just adjust your workflow to make sure that everything matches up when it flows through your bank accounts in real life. All right, so this example is of an insurance company. They hold funds in trust for someone who actually files a claim, and they get a fee for actually doing the service. So they got to account for, number one, their fee. Number two, they want to account for the amount of the claim that's owed to the client. All right, so they're paid by an insurance company. They take that money in, and they want to make sure that that's tracked properly inside their books. So number one, you want to understand the invoicing process. Now, you can do an invoicing process on the books, even if you don't directly invoice the client. So you can take an invoice saying to make sure you're accounting for this properly up here. That's why I say we have an invoice that's coming in for the inflow. And then when the money actually comes in from the insurance company, we can categorize that as a received payment to that invoice and as a liability owed to the end client. So that money comes into their holding account, which is the trust account. And then the chart of accounts that are impacted when that money comes into that trust account, that deposit, is number one, the liability that's owed to the end client, the person who's receiving the claim. And number two, this is also categorized to a payment to their invoice. Okay, so that's accounted for. So the only difference that will be remaining inside of that trust account over here will be the amount that will be going to the client that's owed to them after they make their transfers for whatever fees they're deducting from that trust account. Okay. Now the outflow is what we're talking about a little bit here now too, is when we cut that check out to the client, we want to understand how the payment gets split. All right, so now that liability was hit, so this is the split here, it's going to decrease the liability, and it's also going to decrease the amount that's in that bank account. Okay, so whenever you cut that check, the category is going to be to that liability to reduce the liability, so that we're not causing ourselves extra expenses. We're overstating our expenses. That's something that we don't want. We don't want to duplicate that either. And in this case too, we did not duplicate the income. The only income that was recorded was the income on this invoice, and everything else that we received, this goes to pay down those balances. So the accounts receivable goes down, that client no longer owes you any money, and then this also increases the amount that you want to keep record of how much you owe to that client, and then when that pays out to the client, that reduces the liability down here. Okay, I'm just going to go over this quick example of how this flows in the bank feed for QuickBooks for this client to make sure that, like, when that comes through and you're reading those transactions, that's not going to be duplicated on the books. All right, see you in a second. We're going in here making sure that these transactions are not duplicated. So we're going to select this find match because the transactions are already entered in the books for the payments received. So part of this is a payment, and here's a payment right here. So we're going to select that. The rest of this is owed to their client. So we want to make sure we resolve the difference. Now down below, we make sure we click the same client name, and we're going to map this to the liability account to make sure that we're not duplicating the income. We're just showing exactly what's going to be owed to that client so that when we cut the check to the client, it impacts that liability. So there it is. Now that the difference is resolved, you can go ahead and save this transaction. Before we do that, I'm actually looking here to make sure that it's lining up properly. I'm just doing the background check to make sure that everything is matching up on the information that we have on file. You always want to double check this, guys. And I'm doing this on another screen right now, just making sure these balances are matching up, the dates are matching up, and everything else before we finalize this and save it. So once I find this, I'm going to come back here, make sure we can resolve this transaction, then save it. All right, so now we're going to go ahead and save this. And that's how you make sure that the transaction isn't going to be duplicated. Now we have another check here that goes out to that client, so we're going to match this up too. This is also on the books. We see we have that check matched there. It's the dates and everything match. And now we're going to go ahead and save that. All right, guys, that is it.